Hey guys, welcome to the very first live stream of my YouTube channel. In today's session, we're going to be running through the financial markets and focusing specifically on our stock indice futures. This is the Nasdaq, the S&P, and the Dow Jones Industrial Index. Now, today is the 1st of May. It is approximately 9:30 Eastern Standard Time. So, market has just opened. Let's do a favor, or let's do both of us a favor. Hop right into it. So, as you can see, I've got a blank canvas in front of you. We've got the Nasdaq, we've got the S&P, and we have the Dow Jones Industrial Index. So here you'll see the different symbols or assets, and we will be specifically looking at our futures for this moment in time. Now, what I'm going to do here, I'm going to start marking out specific levels that I will be monitoring. And these levels will ultimately determine our bias for today's trading session. Now, today's trading session is going to run from 9:30 Eastern Standard Time to about noon. So, fingers crossed we do get a setup. Now, it's not every day that we will get a setup. If we do, great. If not, it is what it is. Such as life doesn't always pan out the way we want it to. I'm just busy setting everything up. So we've just marked out our current day low. We also marked out our current day's high. Now I want to see a rate on liquidity during our 9:30 open candle. Now we are a bit late, like I said, first live stream of the channel. As time goes by, we will obviously have marked out our liquidity levels and given ourselves a proper preparation for the market session open. But that right there is it. It's very basic, very simple. Now, we've clearly seen a red and sell side immediately on the S&P 500. And drop down onto the lower time frame, being our 5 minute. And this will be the lowest time frame that I'll be looking at. I'm not interested in anything lower than this. I am day trading. So I'm looking to take a position today and exit all within this session, which once again runs between 9:30 Eastern Standard Time to about noon. So it gives us 2.5 hours to find our setup. If we can't do that in this window, it's just tough luck. We're not looking to force any trades. The main skill set you guys want to focus and prioritize on when it comes to trading is 100% going to be patience. All right, without patience, we can't do anything right. And if we are not patient, we will be taking positions prematurely, and that's ultimately going to leave us with a loss, which is just the last thing that we want to do. Now, should we get a trade, I'll be taking it on this. This is MetaTrader 4 over here. You can see it is a real account, so this is real money. We're not playing games here. Just we have come fully prepared for today's session. So, like I said, Nasdaq 100, we've marked out both buy side liquidity as well as our sell side liquidity. S&P 500, we have also marked out our buy side as well as our sell side. We can see here that sell side has been swept on the S&P 500. So I'm no longer looking to be bearish. I'm only bullish. For me specifically, and my approach to the market, once we have swept sell side liquidity, I'm by no means, way, shape, or form looking to take any further sells. I am looking to now exploit the low of day, which has just been formed and taken, and I'm going to be looking for high prices. Hence, I have put here a bullish bias on my S&P pair. Now, the Dow Jones Industrial Index, or Dow, has also swept its sell-side liquidity, which came at roughly 925. So once again, just like with the S&P 500, I will no longer be looking to go short on this position. So for those of you who are a bit confused with my terminology, long means to buy, short means to sell. And when I say bullish, just remember a bull's horns go up, a bear's claws comes down. So if I say bullish, it means I am looking to buy, right? It just makes no sense for me to want to sell past current day low. So we've clearly formed that, or we've clearly raided the sell side, resting below the marketplace. We still have buy side open. So if we look at all three of our indices as a whole, and what I'll do here is I will move over to a better view. Oh, perfect time to actually look at the economic news events for today. We do have high impact news coming in the next 24 minutes. So at approximately 10 a.m. Eastern Standard Time, we will be seeing some news. Now, the news itself is not what concerns me. It's more so just the time. So if we have not taken a trade and the news comes out, that's good for us. We have no risk on the table. If, however, we are in a trade and news then comes out, we just want to be a bit more cautious. We are going to be looking for uh, not ways to exit necessarily, but like I said, we just want to be cautious. We understand that these high impact news events are essentially injections of liquidity within the market, and the market thrives off of liquidity. I mean, think like think of a vehicle, your car. Your car either uses petrol, diesel. Bottom line, it uses some form of fuel source, and the markets are the exact same. They cannot go up, they cannot go down without first taking liquidity. So we've taken liquidity on the S&P 500. I am bullish. My target is now buy side. Likewise, on the Dow Jones Industrial Index, we have taken out sell side. So my target is buy side. I am once again bullish. Now, the reason I love trading the futures is because it's all got to do with minority against the majority, or the majority against the minority. How do you want to look at it? Think of it as a presidential election or any form of election. There must be, or majority must have power in order for that specific event to come into pass. So we are bullish on the S&P 500. We are bullish on the Dow Jones Industrial Index. So I already have a bullish stance on two of three indice pairs. So that automatically just invalidates any specific shorts for me. So I'm going to change this to bullish. Now, as you can see on the Nasdaq, we have not taken any sell side. Uh, After 9:30 open, we have taken sell side on the S&P 500. Now, right now, I'm not seeing anything that specifically catches my eye other than that liquidity raid that we have taken. But even then, I wouldn't exactly look at it as a liquidity sweep as of yet because we've not traded below any swing low or swing high. Now, for this specific stance, we're going to use this once we are actually in a position to just better monitor the strength and weakness between these three specific stock indices in order to see whether or not we are on side. And it also gives us a good indication if we are offside, if we've taken the wrong position, then we can get out prematurely. But there are obviously rules in place for that, and we'll touch more on that when the time comes. But for now, we are going to look at the full lay of the land by monitoring and assessing these from an individual standpoint. So the Dow Jones Industrial Index, we have, let's go up to the 15-minute. It's always good to get a higher time frame perspective. So the 15-minute, we have made the low of day. We have not, however, traded to previous day's low, which is at this specific level. Then let's look at the S&P 500. The S&P 500 has also taken out today's liquidity or current day low, but as you can see, we have failed to take out previous day's low, right? Then we have the Nasdaq. The Nasdaq has also taken, no, apologies. The Nasdaq has not quite taken our current day's low, and it still has previous day's low intact. So for that, I'm just going to stay patient right now. We might not exactly get the trade we are looking to get because, like I've said, we already have two of three that have taken out sell side. So I'm not looking to sell. I'm not concerned as to what price does. I don't care if it just dives down 1,000 pips, 100 pips, whatever it is. I'm not looking to chase price. All right. I'm looking to assess these markets in tandem with one another. They are all closely correlated. Now, for some of you that don't understand what correlated means, just think of something being very similar to one another. And if we just look at the movements alone, you'll see exactly what I mean by a closely correlated pair. If we look at these two specifically, the Nasdaq 100, here you can see there's the name of the asset that we are looking at. we can see that we've seen an upwards rally from 9:25. We have a bullish 5-minute close. 9:30 we have a bullish 5-minute close, and 9:35 we also have a bullish 5-minute close. Now, I want you to look at the S&P 500. We have the exact same bullish closes from 9:25 up to 9:35. That is a prime example of a closely correlated asset. And the brilliant thing about that is, if we look at the Dow Jones Industrial Index, we can see that 9:25 is a bearish close, 9:30 is a bearish close, and 9:35 is a bearish close. So these three assets are usually very closely correlated. They are usually moving in tandem with one another. However, right now on this very given point in time, we do not see that. So that to me is just a telltale sign that I'd rather sit on my hands, be patient, see exactly what the rest of the session has to play. I mean, we've not even closed the first 15 minutes of this specific session, so we're still very early on. And like I said, and like I will say in the future, patience is key. Trading is not the most exciting industry to be a part of. It is probably the hardest industry to be a part of. Um, but for me, in my past, I've taken a lot of losses, as will a lot of the viewers watching this, because that is just the nature of the game. All right, it's who owes whom. It is dog eat dog, rat eat rat. It's just the raw reality of this game. It's not something you want to take lightly. The last thing you want to do, like I said, don't want to take any premature trades here. I mean, if we choose to act blindly, take a trade, take a loss, then the very next trade we need to win in order just to be break even. Whereas all of that could have just been mitigated by being patient, sitting on our hands, and seeing what the rest of the session has for us. So right now, guys, let's stay patient, see what the rest of the session does. I'm going to change our view over to the full screen, see what our other assets are doing. I specifically only focus on the futures, but just always curious to see what Forex is doing. That's actually how I started my venture in the industry. Then the exchange rates. Now, you'll see with these exchange rates, they are all against the ZAR, which is basically the South African Rand. And I am a South African individual, so I'm always looking at the exchange rates between the Swiss franc, the pound, the euro, and of course the US dollar. Now, the US dollar has, or the US have their hands in every single cookie jar. So just by default, if the US dollar drops, all other fiat currencies are going to drop with it. Likewise, if the US dollar sees a rally, then all the other uh, exchange rates should also see a rally against the rand. Well, completely dependent where you're looking from and what your base currency is. For me, like I said, it is the rand. Then we'll take our shifts over to cryptocurrencies. We're looking at Bitcoin currently trading at 71k. We have Ripple at 1.2k USD. Correct me if I'm wrong. Not too sourced up with the cryptos. I don't exactly focus on them at all. Then we have Ethereum currently trading at 1.9k USD. Now minerals. Minerals is a brilliant way to essentially keep the purchasing power of your money as time goes on. I closely monitor crude oil just because of the current economic events happening in the world and how crude oil plays a massive role in many different industries. There are a whole bunch of derivatives that come from oil alone. We're talking about tarmac, petrol, fuel, natural gases, etc. And obviously, just silver. There is a very high utility of silver in the world. I mean, our phones are made of silver, laptops are made of silver, and especially now with where we are going, the world is adopting AI at a very, very fast pace, which means they're going to need the appropriate infrastructure in order to house all of this technology. And that's going to come in the form of data centers. And a vast majority of the technology that we use on a daily basis today uses silver. So I very much think that silver is underpriced at just $74. Now, gold is a brilliant investment. If we just take a look at gold, and I'm only going to do this now because the session is pretty slow at the minute. Like I said, we've just gone past 15 minutes. So if we just zoom out at gold all time, I mean, you can see how much better your money would have been had you just stayed in gold, or not specifically traded gold, but used gold as your quote unquote fiat currency or your holding mechanism compared to the dollar, Swiss franc, euro, pound. It's like I said, ladies and gentlemen, the unfortunate truth is if the dollar falls, apologies, we'll look here at the dollar index. As the dollar index falls over time, all of the fiat currencies fall. And my understanding of this is just because the dollar is essentially the base currency for the world. I mean, most of the money in the world all travels through Wall Street. And yeah, it is a bit unfortunate. I mean, if America sneezes, the world catches a cold. I'm sure you folks have heard that saying many a times, and it is true. Well, that's my opinion anyhow. So the Nasdaq still taking its time. Have not seen anything significant, anything that's caught my eye as of yet. I will, however, be closely monitoring these. Like I said, we just want to shuffle up. We'll go 15-minute, get a bigger picture here. Let's look at the 30-minute in actual fact, and then we'll just sift through these different assets to see exactly what we are looking at. So like I said, we still have previous days low here. Let me mark that off for everyone. Previous days low. So you guys can see with my key levels, I'm actually only looking for two different key levels. Obviously, it'll be buy side and sell side. Yeah. Now, there are two different types of buy side and sell side that I'm specifically looking for. I'm looking for current day's low as well as previous day's low. That is the range that I use as a day trader. Okay. As a day trader, we are looking to get in and out of the market within today's session. Within the next 2.5 hours, I'm looking to take a trade and exit that specific trade. I'm not holding a trade over the weekend or over the night. Now, that is just my way of doing things. It suits my personality to a T. I am someone who makes their decisions rather quickly and also doesn't take too much for me to want to change that specific decision. So, like I said, I want to get in, I want to get out within the same day. So it's very important for me that if I want to get in and out within the same day, I'm going to be looking at lower time frames. All right. Now, with lower time frames, you really do need to be a lot more accurate. Whereas with higher time frames, patience comes into play. It's a lot, I don't want to say easier, but it's a lot less likely that you will lose if you do your analysis on a higher time frame. It is, however, likely that you will need to wait a lot longer. So keep that in mind. Like I said, some people swing trade, some people will day trade. There's a million ways to skin a cat. I'm sure that's another saying you guys will have heard. And no one's right, no one's wrong. It's just completely up to you to essentially do your own research, play around, see exactly what you like best, and then just double down on that. So we're going to mark our previous day's low for the S&P 500 as well. Now, I'm not sure if we will raid that. Ideally, I do see, or ideally, I want to see price push down a little bit lower, and then we would be able to get that bullish scenario or that market maker buy model pan out. If we don't, however, get that, we're just going to stay patient. Like I said, not looking to take shorts. Now, once again, guys, I just want to reiterate the fact that I'm not a professional trader. All right. When I say I don't want to take shorts, it's meaning my opinion on what I am not looking to do. If you guys see an opportunity and you guys think it's the right one to take, by all means, go all out. Well, risk accordingly, but you do you. I mean, if I am a profitable day trader, you guys are going to see it happen live. If I'm not profitable, you're once again going to be seeing it live. So, for those of you who are watching, if there is anyone watching, I've got no idea, brand new to the space, brand new to the live stream, that is. Fortunately, I've got the hardest part down in trading. So, everything else should be a little bit easier compared to what it was like trying to become profitable. All right, so we are 20 minutes into the session, which means our first 15-minute candle will have printed out. Now, nothing significant in this specific move. We are seeing somewhat of a retracement towards the upside. but we could very easily still see downwards movement or upwards movement. Like I said, I'm really hoping that we do see a small downwards push before we get our market maker bar. If we get our market maker bar model today, we have 9 minutes left of the 15-minute candle. We also have 9 minutes left of the first half an hour candle, and that'll just give us more data. I want you guys to look at these time frames as essentially data. The more data you can get, the more accurate you can get. But of course, everything will take patience in this game. Like, you guys are probably going to get sick and tired of me saying that, but I really do mean it when I say it. Patience is key. Patience is a virtue. Patience preserves profit. I like that. We'll go with that until I can come up with a better one. So we're going to change our view over to the chart. All right, guys, and this is a very, very important point that I want to bring up here. So over here, you can see that is the O stands for opening price, all right? The H is for the high of that candle, the L is for the low, and the C is for the close, all right? Now, words are opinions, numbers are facts. Eyesight works the same in that your eyes might see something, but the numbers will say something different. Do yourself a favor, always look at the number, okay? Numbers don't lie. Numbers don't have opinions. Numbers are just pure, okay? I'm a numbers guy. I really do like numbers. They don't have opinions. They don't mess you around, okay? So get in the habit of looking at these figures up here for the open, the high, the low, and the close, all right? So let's look at an example. Let's look at 920 over here. 920's low came at 30.295.25. All right. So it'll be this quote over here. Look at the 920 candle. There you can see it. All right. Then likewise here, we want to see the same on 925. But remember, 925, we won't be looking at the low. We are going to be looking at the open. Chaps, if you don't understand how these candlesticks essentially work and how bullish candles will have a lower open and a higher close, whereas bearish candles will have a higher open and a lower close, I highly recommend you guys to just take a step back from the live markets, go do some due diligence, research basic terminology on YouTube somewhere, get yourself familiar with the essentials in this industry. Like I said, this is such a complex game. The last thing you want to do is come in here informed or uninformed, should I say. You really do want to be informed when you step into the marketplace. It just makes everything that much more simple. And I mean, we're playing a game of chance. Everything we do here is a numbers game, even probability. All right. Now, the moment I close this door, I sit down in front of this laptop and I look at these charts. I'm essentially entering a game where I'm not supposed to win. Okay. The industry itself is 100% manipulated, but that's a good thing because we understand that what's manipulated can be controlled, and what's manipulated can be understood, and once it's understood, it can be implemented. So we should not fear about manipulation, we should rejoice, all right? Because this is a prime example or a prime reason for us to really just do our due diligence. And if we understand that these markets are manipulated on a daily basis, surely by doing our own due diligence and essentially backtesting different strategies and eventually coming to something that will win. And I promise you, by staying on these live streams, you guys are going to get a much better paradigm to this market. You guys are just going to slingshot past years of trial and error by simply staying patient. I mean, that is pretty much going to be the name of the game here. You guys are going to hear me say it 1,000 times, probably already said it over 10 times in this live stream, and we've only been streaming for 25 minutes. My first 25 minutes of live streaming, boys. Let's go. Like, subscribe, comment down below. regardless whether you like this or not, comment down below. I mean, as business partners, it's crucial for me to understand what you like, what you don't like. I mean, that's the key thing to any marriage, eh? It's compromise. And I cannot compromise on anything if you lot don't communicate. So get typing, people, please. Now, we are seeing a push down on the Nasdaq, S&P 500 also showing a push down. But just by looking at these two charts together, we could probably say that the Nasdaq will take out its low before the S&P 500 will, which is a good thing. Um, well, it's not a good thing. It's not a bad thing. We just don't want to see the S&P take it. We do want to see the Nasdaq take it. Ideally, we see a sweep of this swing low here on the Nasdaq, whilst S&P fails to make its swing low or fails to trade below that specific swing low. Now, in my spare time, I'm going to sit down, I'm going to go through all the concepts that I use, and I'm going to try and make an ebook for you guys for any of the people who aren't familiar with any of the terminology that I say. I highly recommend you guys do your research or use the ebook that I create at a later stage. I will make it and link it in the descriptions down below in a future video to come. And it's important that we are all on the same page, because if I'm running these live streams and you guys don't even understand the terminology, let alone how I implement that terminology and use them together to come to a mechanical version or a mechanical approach of the market, you're ultimately just not going to get what you want out of this, and it's not going to bear good fruit. You know, uh, with my background, my family does not understand this stuff at all. They just don't understand it, you know. If you can't hold it, it's not real. It's quite funny because we are all fairly faithful, and that's not something you can hold. But anyways, regardless of that, I will be making an ebook for everyone, and that's essentially just going to go over some of the terminologies that I use, and then you can couple that with these live streams to see exactly how we implement that terminology, how important that specific terminology is, and how all of it just comes together. All right? Think about it as a engine. Every single engine has different components, and each component has its own specific role, and each component is found in its own specific area. So when I mention things like liquidity sweep, liquidity rage equals a liquidity purge, that is probably going to go right over the heads of most of you, and that is perfectly fine. I mean, if you're first starting out, don't worry, it is what it is. That's kind of just the industry standard. You can get into any industry. In the very beginning, it is going to be somewhat tedious. It is going to be somewhat overwhelming, but if you just persevere, you will get through it. And like I said, that ebook is essentially just there to make that process a little bit easier for you lot. So let's see. Let's stay patient. Still bullish on all of our pairs. The Dow Jones Industrial Index is not aligning up with the other assets. So the Dow Jones is starting to rally higher. S&P still pushing lower, but we do definitely have a little bit of strength compared to the Nasdaq. The Nasdaq is 100% the weakest pair right now. As you can see, it's fairly close to taking out that swing low, which really does start to get me, which really, I'm starting to rub my hands, is what I'm trying to say. I don't, malfunction, bear with me. Okay, so let's once again swap over to a full chart. If we go over to the 15-minute, there is definitely a cracking correlation where the S&P 500 the has traded below last week Friday's New York session. Now, that is somewhat significant, but I just don't see the first 5-minute candle. I don't see that as a liquidity sweep. A liquidity sweep to me is when the wick trades below a swing low, okay? And that specific swing low that it violates needs to be common across the other assets, being our Nasdaq, S&P, or the Dow Jones, okay? Once again, we are always looking at the market from majority against minority. Okay, if we are targeting a specific swing high or swing low, that same specific swing high or swing low needs to have occurred on one other asset class. Okay, I want you guys to think of it as a election or a scrum. Now, I'm a South African bloke. We are very big into rugby. For those of you guys who are not into rugby, just think about something that essentially involves force. Two objects colliding, okay? If we have two people pushing against one, the two people are going to beat the one, all right? Unless I was trying to be funny there, but we're not going to be that, okay? Just two beats one. Majority will always beat the minority, okay? If you guys have majority in your favor, then it just ultimately increases your probability of walking away with the profit. Now, the Nasdaq is fairly close to the specific level. What we're going to do here is we're going to add a price notification instead, in case I or you walk away from the charts. We are now looking at these specific levels. Okay, now let me just get your attention on this chart. And now you're going to see exactly what I mean by a common swing point. Okay, so a swing low is a three candle pattern. All right, there is a low, a lower low, and a higher low. Okay, so here we have a low, a lower low, and a higher low. All right, so 920, 925, and 930. All right. Now, the specific candle which makes the low on the Nasdaq is the 925 candle. Now, with S&P 500, you can see a swing low here, which is at 930. That is all right. That is still a common swing low to me specifically, because like I said, a swing low or swing high is a three candle pattern. Okay, a swing low is a low, lower low, higher low. All right. Now, that's when we look at the times of those specific swing lows. And if we can see the same common 5 minute candle in each specific swing low, it just, that to me is a common swing low. It is a good reference point to be monitoring, and there will 100% be liquidity below or above, dependent on whether it's a swing low or swing high. So here we can see the actual swing low formed on 925 on the Nasdaq, whereas on the S&P 500 it formed at 930. But now, like I said, it's a three candle pattern. So the swing on the Nasdaq is 920, 925, and 930. Likewise, here we can see it's 925, 930, and 935. We can see of those three 5 minute candles, the common time is 930. Okay? 930 occurs in the swing low on Nasdaq, and 930 occurs in the swing low of the S&P 500. Or the 930 candle forms part of the swing low, say it like that. Okay, so it does look like the Nasdaq is about to trade below. Fingers crossed we don't see the same on the S&P 500. Now, it does look to me, if S&P 500 does continue to go lower, it could see a sell side raid of previous day's low, which I have marked over here. Let me just double check that I've done the same on the Dow Jones. We'll go up 15 minutes to make things a little bit easier. Yeah, okay. Well, we can clearly see that from a higher time frame perspective, the Dow Jones is very far from the sell side at previous day's low, whereas S&P 500 is a lot closer. Likewise, the Nasdaq or NQ. So that in itself, right now, still does not signal enough for me to want to get in a trade. If, however, we look at the 15 minute, we can clearly see that the market structure is currently supporting bearish movement. Just look at how the down close candles are eating all of these up close candles, and the minute any candle tries to trade back into a up close candle, it's just immediately rejected, and it once again forms a new order block. Okay, now I'm sure many of you guys in this industry will have picked up on generic terms like order flow, order block, liquidity raids, sweeps, purges, previous day highs, lows, buy side, sell side, all of these specific things. Once again, Like, if I read a cookbook, does that make me a chef? No. It's all about actually cooking that'll make you a chef, and it's all about trading that'll actually make you profitable. Okay? And the only way to do that is by essentially trial and error, like with any industry in the world. The only difference is with many industries, you're able to do or perform trial and error with other people's money, very little money. Now, same can be said for trading, but just come on, chaps, be real with yourselves. We've all been there. We're all fairly impatient. We don't really want to wait around in order to build up equity in an account. We want to go all in. We want to risk it for the biscuit. And more often than not, we do come out second best just because we are not informed on the markets. And more often than not, that is just due to A, one, not understanding, and B, just a lack of patience. So that is the one thing that we are going to practice today is patience. It's not going to be exciting. Trading really is exciting. And you guys don't want it to be exciting, all right? If we think about things that are exciting, we get our emotions involved, and money and emotions just don't mix. Money requires an open mind. Emotions is all about the heart. And the mind and the heart are in a constant battle with one another, especially when it comes to trading. And that's what makes trading so hard, is because it's such a emotional game as well. I mean, you're dealing with money, and not only that, but you're specifically dealing with your emotions that occur when you're either in a floating profit or floating loss. All right. And I can tell you from personal experience that dealing with floating profit is 10 times harder than floating loss, which is why it is so important for you guys to essentially take a step back and formulate a plan that mitigates your emotions from coming to the table. For example, make specific projections of price, where price moves um, to a specific point, then you either take partials, you go break even, or you start trading and stop. The name of the game, once you are in a trade, is essentially trade management. All right. And that is a defensive game. You are no longer on the offense. All right. Right now, we are on the offense. It may not seem like it, but all the hard work is done in our anticipation or interpretation of the chart, which essentially only happens once price reacts at a key level. We never try to predict what price does. We're not interested in doing that. We mark out key specific levels, we remain patient to see what price does at that level, and then afterwards, we are patient in our trade, we are patient after our trade. We are always patient. Bottom line, patience is the name of the game, and that's something that we want to prioritize every single day. All right. And likewise, trading is a very grueling industry, and that every single day it is going to require 100% of your mental capacity. Okay. You may have a day where something has happened in your personal life that might have a impact on your thought process. You just have to leave that stuff behind. You got to walk into a neutral environment. I highly recommend you guys do it in a room that is isolated, separate from your bedroom, separate from your lounge, your kitchen, any place where it is quiet, where it's dark, where you can just focus. All right. You don't want to be looking out windows. You don't want to be looking at anything other than the charts. And all that's going to do is, once again, just it's a game of probability. Okay. If you've got distractions everywhere, it's just increases the probability of you losing focus, and it just decreases the probability of you losing and doing your absolute best. Okay, so keep that in mind, please. All right, so it looks like we're starting to get a rally higher on the Nasdaq. S&P is following suit, and they all seem to be tagging along with what YM has got going on right now. Still not seeing anything that piques my interest. So take a guess what we're going to do. We're going to wait. We're going to stay patient. I don't know how many times I'm going to say that in the session, but it's going to be a lot. So bear with me. Stay tuned. The market will move. The market always moves. It's just all dependent on whether we're going to catch the right move and whether that move is going to be a profitable. Probably a good idea just to, apologies guys, I'm OCD to the bloody maximum. If you lot could see my room, everything has its little, everything's got a corner. Everything's got equally spaced, or everything is equally spaced. Okay, so if I just shift out like this, we can clearly see how far the Dow Jones is from its previous day's low. Once again, not concerned with that. I do like the fact that we are seeing lower prices. Like I said, I'm bullish on all of these pairs, meaning I'm looking for a specific setup that is going to move up. Ideally, we can target buy side liquidity, but if the Nasdaq takes on its sell side, I'm going to be looking for a 1:1 trade, meaning if I risk $1,000, I will be looking to profit $1,000. Okay, and sometimes that tends to change if we are in a, or if we are monitoring a specific asset that has not taken sell side or buy side, it's yet to take any of these current day liquidity levels, then I'll be looking for a 1:2 trade. But I never go over 1:2. More often than not, it will be a 1:1. Like I said, I tend to change my mind very, very early on. And I'm also in a position where I am risking a lot more than what I usually would. So it is imperative for me to be extremely accurate. And that's exactly why I'm moving just for a 1:1 or perhaps a 1:2. Today, we're probably not going to see that 1:2 take place. If we could see a sweet lower on the S&P 500, whereas the Nasdaq failed to do it, I just don't see that happening. So I'm not exactly even going to go down that road of what I would try to see. I don't want you guys to get in the habit of predicting anything. Okay, we are 100% just here to react. And right now, there's not really too much for us to do. So sit on your hands, remain patient. Comment what I could do to make these live streams a little bit more entertaining. Like I said, it's my first time actually even using YouTube live streams. So my whole game plan for today was honestly just to stream it. Then I'll rewatch it later on tonight. I'll maybe do a market review video. Again, completely new to that. So it will probably be somewhat lackluster, but bear with me. We are going to be looking to optimize absolutely everything we do. But in order for me to do that, I'm going to need your help. I'm going to need you guys to not only like these videos if you like them, but dislike them if you don't. You know, it's just feedback for me to see what works, what doesn't work. That way I can optimize and just make sure that you guys get the most value humanly possible. I want you guys to come to these sessions and not only be excited, but be focused. You know, I want you guys to share a bit of information as to where you guys are from, what you guys do, what got you guys into trading, what you guys like about trading, what you don't like about trading. You know, it's a family discussion, family channel, a place of peace and prayer where all are welcome. Truly, probably a good time to bring up today's sponsor. It is the Lord and Savior, whom I thank for this opportunity. Hopefully, there will be an opportunity. But we are about 20 seconds away from turning 10:15 Eastern Standard Time. We are roughly 45 minutes into the trading session. We've not exactly seen too much. Prices in somewhat of a range right now, which could indicate an expansion later on. We'll see. We have had that high economic news come through at 10, which you can see didn't really do anything. I'll find that 5-minute candle for you. It was this one right here. Did absolutely nothing. I mean, from the naked eye, you wouldn't even know that that was high impact news. And that's exactly why I don't really fuss myself too much with the high impact news, other than I know there is high impact news. I don't want to be in a trade and I see a massive candle and then I don't know why that candle has occurred. So you just want to gather as much information as humanly possible, and that's ultimately just going to help you guys with your analysis. Uh, which actually brings me up to another talking point. There are three different types of analysis. Now, what we are looking at right now is the charts, is price action in its raw form, which in my case is a candlestick. You can change it. There are different types of charts you can look at. I am just very familiar with candlesticks, so I will always stick to candlesticks. All of these live streams will be using candlesticks, and this is technical analysis, all right? This is price action in its purest form. Now, candlesticks are extremely interesting because once you understand how a candlestick operates, you will 100% come to the conclusion that price is manipulated, okay? There's no way around that. Now, I don't want to start a whole debate about he said, she said. That is just my interpretation. I really hope that you guys come to the same conclusion. It's just going to help you guys a lot more. Okay. And like I said, technical analysis is one of them. Now, technical analysis, I would argue, is probably the most important one. Then we have fundamental analysis. Fundamental analysis refers to economic news events or just general market events happening in the world from a macro perspective, like a war, famine, uh, interest rates, these types of things. All right. It's everything outside of the chart. And then we have what is known as quantitative analysis. Now, quantitative analysis is more got to do with numbers, seasonality, also very important. But from a day trading or day trader's perspective, quantitative analysis doesn't play as big a role as one would think. Like I said, quantitative analysis has to do with numbers and seasonalities. So seasonal tendencies. And seasonal tendencies are ranging from 5, 10, 15, 45, however long. It's completely dependent on how you do it. But quantitative analysis is not that big when it comes to day trading, or at least for my approach. Then fundamental analysis also, it's not as important to me as technical analysis. We are trading the price action charts, okay? We are looking at candlesticks and interpreting whether the price can go up, go down at key specific levels at specific times, all right? I really want you guys to hear the gravity in my words when I refer to time, okay? Now, all my time references for these live streams are going to be in Eastern Standard Time. For those of you who are not familiar with Eastern Standard Time is, it is New York, all right? And my understanding is, like I said previously in this live stream, I am of a strong belief that majority of the world's money flows through Wall Street. Wall Street, found in New York, America. So if I ever give you guys a time reference, I will make sure to clarify whether that is South African Standard Time or Eastern Standard Time. Now, if you look at my charts or if you look at my screen over here, you'll see that it is 18 minutes past 10 or 19 minutes past 10 Eastern Standard Time. Then this is local time, all right? You'll see that there's a 6-hour difference. So it is 19 minutes past 4 p.m. for me, and it is obviously 20 past 10 a.m. Eastern Standard Time, right? As a general rule of thumb, I will be doing all of my references in Eastern Standard Time. Just makes it that much simpler for you guys. I'll also, like I said, you don't want to get confused with where you are in the world. Keep that separate, all right? Look at the market in its purest form, and we're looking at the US stock indices, okay? Which thrives when the US stock market opens. Okay, for those of you who are unfamiliar with what I mean by indices or an index, think about a book. The moment you turn a book to the first couple pages, there's usually a tablet where it essentially summarizes everything that happens in the book. It'll give you the different chapters, the names of the chapters, it'll give you the pages of those specific chapters, And all of that forms a index. Now, same thing here. We have this is a index. It is the Nasdaq 100. So it is the top 100 tech performing stocks or companies in America. The S&P 500 is the top 500 performing companies in America, and the Dow Jones Industrial Index is the top 30. It doesn't show the icon here for 30, but there you can see 30. Okay, so with that information alone, we can already come to the conclusion that these markets are closely correlated. Why? Because the top 30 companies will definitely be in the top 100, and the top 30 will definitely be in the top 500. Likewise, the top 100 will be in the top 500. So all of them have a little bit of one another inside them. Not the Dow, because the Dow is obviously the strongest one. The Dow won't exactly carry the other 470 stocks that make the 500. But we can definitely come to the conclusion that these are in some way, shape, or form manipulated. They move together. They want to move together. I urge you guys to go do some backtesting, and you'll see in the most significant impulse moves, we have seen all of these assets come together. All right. We essentially want them to break their correlation or go against one another. It just sets itself up for a SMT, smart money tool, smart money technique, whichever way you want to talk about it. It's essentially just a cracking correlation where one asset is going against another, where by law, nature, they go together. All right. For right now, we're not seeing any significant moves, so we're going to go to 30-minute. Apologies. I'm going to shift over to the big screen. A lot more simple for us to go a higher time frame. We'll actually go to the 60-minute, see what we've formed in previous hour. $15. All right, let's get a closer look here. Go with 15 on the Nasdaq, 15 on the S&P, and then we'll go 15 on the Dow. Sorry, I normally talk to myself, so I'm a little bit more quiet. Okay, so like I said, we want to see common swing highs, common swing lows. All right. All right. Now I'm looking at the low of Nasdaq's 915, and I'm looking at the low of the 10 a.m. candle. And for those of you who don't know, always look here. Please, 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 please get in the habit of looking up. Don't eyeball it. Some people are blind. Numbers are not blind. Numbers are not deaf. Numbers don't lie. Get in the habit of always looking at the numbers. Okay. So the low on the Nasdaq at 915 comes in at 291.50. The low at 10 comes in at 292. See, here's a prime example, right? Just by looking at it with our eyes, we would say that those lows are relatively the same, but from the numbers perspective, you can clearly see that it is a higher low. Sorry, I just had a phone call there. But you guys are a little bit more important right now, eh? If you're ever in doubt, just go up. If you guys are ever looking at a lower time frame and you're unsure, do yourselves a favor, just zoom out. High time frame makes things so much more clear. You do have to either be a bit more patient, of course, but we're not exactly seeing anything too significant here. I do like the fact that buy side still remains open on all three of our assets. That shows a strong draw of liquidity towards the upside. Now, we might not get that because that is all-time highs, and we've been making all-time highs non-stop, which is not a good thing, not a bad thing. Well, I mean, completely dependent on your investment portfolio will determine whether it's a good thing or bad thing. For me, don't really mind. Like I said, I day trade, I'm in, I'm out within the same day. Shift back to our low time frame. Just gonna stay on here for a little bit. Now, it's important to note when prices ranging like this, I am always keeping my eyes on these swing lows and swing highs. All right. I understand that the market is like a vehicle. All vehicles need a form of fuel in order to move. The market's fuel is liquidity, and liquidity comes in the form of my money or your money. All right. It's dog eat dog, rat eat rat. The markets can't win. Well, technically can. I'll say it like this. A buyer cannot win and a buyer and a seller cannot win simultaneously. If a seller wins, a buyer is losing. If a buyer is winning, a seller is losing. All right? Very important. Very, 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 very important. Both parties cannot win at the same time. So we need to essentially wait for one party to get taken out in the form of their stop loss. And then we are looking for reasons to go long, to essentially contradict what that specific person is doing. We want to be contrarian traders all the time. Okay. I'm always looking to pinpoint the low in order to buy, and I'm always trying to pinpoint the high in order to go, in order to, apologies, I'll say that again. I'm always trying to pinpoint the low when looking to buy, and I'm always trying to pinpoint the high when looking to sell. It's less risk. It is a lot harder. Does require a lot more risk or a lot more accuracy, I'll say. No doubt you guys would have heard another comment saying high risk, high reward. It's high accuracy, high reward. I stand by that saying. Right, we're a minute and a half away from 1 hour being gone into the session. Been very lackluster, to be honest. Last week was horrific. For those of you who traded last week, let me know what happened. Was not fruitful for me at all. Genuine. I mean, public holidays. Shout out to all you American lads, but I really don't like it when you lot got holidays. Because if you lot got a holiday, I have a holiday, and I really like to trade. I really like to get involved. And well, I just can't do that when you guys have bank holidays. I mean, the entire world's on holiday when the Americans are on holiday. Can you believe it? To be honest, I got no idea if I'm even streaming. I mean, there's a red icon here on OBS. Fingers crossed. Fingers crossed. At least we tried. That was honestly the goal of today. Maybe take a trade if the Lord allowed it. That'd be brilliant. Win that trade would be spectacular. And to do it live would just be the cherry on top. See if we can't push for the 290 level on the Nasdaq. Shuffle up, see what's happening on a or the 30-minute just close. See how that's looking. Yeah, I mean, just by looking at the 30-second alone, you can see these markets are pretty broken at the minute. We're just gonna have to stay patient, like I've been saying. Once the market reveals itself, they will all align with one another. They'll all start to move in one common direction, and that's when these impulse moves. That's when we rarely see some in large candles, and that's ultimately what's going to push us towards our price objectives. But before that happens, we do need to see a cracking correlation, a liquidity sweep, a liquidity raid, which my understanding equates to a liquidity purge. A change in state of delivery would be fantastic on not only one but two pairs because we are always aiming for majority, and then a retracement into our key zone. That's pretty much what these so-called gurus are going to try and sell you on. But we're going to do it legit. We're going to do it live, and you not get to see firsthand whether or not we are actually profitable. All right, I've just live streamed for my first hour. First ever hour of live streaming. Leave a like, subscribe. Let me know what I could have done better in that first hour. Right, so we're just going to sit on our hands. Not really too much happening right now. We can see that the S&P 500 is somewhat ranging. It's not wanting to make higher highs, not wanting to make lower lows. It's just accumulating. So usually when price does this, we can either see a expansion or reversal. We might see one of our assets expand whilst the other one fails to, which is a good indication that it could reverse. But like I said, we don't really want to get in the habit of ever trying to predict what these markets are going to do. We just want to stay passive by reacting as to everything. And more often than not, these specific reactions are going to come from these swing highs and swing lows because we understand that there is liquidity above and below, and these markets need liquidity in order to move. So perhaps the reason we are seeing such lethargic price action right now is because there hasn't been any significant liquidity taken. Now, we did rate the current day low on the S&P 500 as well as the current day low on the Dow Jones Industrial Index, but both of these uh, lows, well, you can't even call them a low because it's not a swing low, and that's exactly my point. Perhaps we haven't rated a significant swing low as of yet, which is why we are seeing this lethargic price action. But I do like what I see, and that the S&P 500 does seem to want to go lower. The Dow Jones is definitely going lower, and the Nasdaq is pretty much just petering around. It's also in a range. All of them are pretty much in the same range. They're not really wanting to do too much. So this is typical Monday morning price action for you. Some Mondays it's different, some it's not. That is trading, I guess. There's no way for us to actually truly understand when these moves will happen. We just need to lock in every single day from 9:30 to approximately 12. And the reason I say that 2.5 hour time span is that is usually when the most volatility is found within the marketplace. And volatility equates to liquidity rates. and liquidity rates equates to impulse legs. And impulse legs are either stop losses or take profits. So stay tuned to see whether it's a stop loss or take profit. Fingers crossed, however, it will be a take profit, but I mean, anything can happen. We are ready to learn from a loss, we're ready to learn from a win, and we are in a constant pursuit of perfection, ladies and gentlemen. Uh, Let's get a better perspective here on a, what is this, 15 or 30 minute. I mean, just from a 30-minute candle alone, you can clearly see the difference between the Dow Jones, the S&P 500, as well as the Nasdaq. Nasdaq's clearly wanting to rally higher. S&P 500 is kind of caught in between. So I think it's safe to say Dow Jones weakest pair, Nasdaq Nasdaq is the strongest pair, and Dow Jones is somewhat in between. All right, and now you guys will get a bit of a better understanding when I talk about these assets being closely correlated. Once all of them turn and face the same way, it's remarkable. It's impulse legs, it's take profits or stop losses, like I said. But bottom line, that is exciting stuff. All right. That's when you really want to get, or that's when you really thrive as a trader. As a newbie, you're going to get whacked. But, any industry you do, you're going to have to learn, you're going to have to lose. And it's ultimately through your losses that will determine whether or not you pivot and become a better person or a better professional in that specific industry. For us, we're going to learn from the losses. We're going to learn from the wins. We're going to learn from the break evens. We're going to learn from the days of inaction. We're just constantly going to learn. All right. And I want you guys to let me know what you guys have learned from today's live stream so far. I mean, I know we haven't exactly got the ideal price action. Some days we will have already been in the market in the first hour. Some days, well, I mean, some weeks we won't even trade. Literally last week. I mean, last week we did take one trade. It was break even, but that was pretty much it. Take in mind, Monday was a public holiday. Usually the day after a public holiday is pretty inefficient, doesn't really do too much. Now, that's not a rule of thumb, that's just a perspective of mine. Wednesday was the day that we hit a break even trade. Tuesday was nothing. Thursday was also no. Sorry, I said Tuesday twice. Monday public holiday, Tuesday no trade, Wednesday break even, Thursday no trade, Friday no trade. So very, 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 very boring week last week. I'm really hoping that this week will go better. We do have a lot of economic news in this week. Like I said, I'm not too focused on the news itself. I just see these economic news events as the perfect excuse for the market to just pump liquidity uh, into the charts. And from there, that's when we can expect higher moves. Now, there are some news events that are somewhat significant. You guys are going to see Thursdays always have jobless claims. That's just the norm. And then the first Friday of the month is non-farmer payroll. Okay. That is every single first Friday of the month. There is non-farmer payroll. And on some Wednesdays, there will be FOMC. Now, non-farmer payroll, from my understanding, just is essentially the unemployment rate, or perhaps that's a different news event. Not really too sure. Like I said, I don't focus so much on the fundamentals. I'm just curious to know if there are fundamentals coming in. Okay. I'm absolutely driven by technical analysis. Technical analysis is my bread and butter. That's the one thing that I've been backtesting for pretty much the longest period, just looking at the relationships of these closely correlated assets as well as their candles and how there's always a signal that is given to the public, whether or not they know it before an impulse leg. And that's essentially the hand turning or the market turning its hand and showing you what it wants to do before it does it. Um, which is why it's so important to really lock in for these live streams, really pay attention as to what price is doing all the time. I mean, for the full 2.5 hour trading session. Now, I understand not everyone's going to want to stick around for 2.5 hours. That's just each to their own. The reason I do that is my understanding is 12 o'clock is noon. So that's when the volatility in the market will tend to decrease for a certain amount of time until the PM session. But I'm never trading the PM session. For me, it's just a bit too late. It's not something I can do on a consistent basis. Whereas the New York AM session from about 9:30 Eastern Standard Time to about 12 or noon Eastern Standard Time is the optimal trading window for me. It lines up with my local time. It's the most volatile time in the trading day, and that's usually when all of these impulse moves tend to occur. And an impulse move is essentially just a very strong move towards a major liquidity level. And I found that these liquidity levels come in the form of current day high, current day low, or previous day high and previous day's low. So those are the two that I'm targeting. Now, I made a mistake. I think it was about 2 weeks ago. Stop loss was hit. Unfortunately, I took it on the chin. I didn't like it. I absolutely hate losing. I hate losing. Like, don't like losing. I don't think anyone likes losing in this game, especially because there's not really anyone you can essentially chat to for feedback unless you're in a mentorship. But the thing is, like, these mentors, whether or not they actually know what they're doing, I mean, come on, surely. Anyways, it's just when you lose, it's up to you to dig deep. And when I say deep, I'm not talking about putting in the time. It's just all about questioning yourself, what you were thinking at that specific point in time, what emotion was going through your head, why that specific emotion was going through your head, what was price doing, whereas was price doing a specific thing or was it you wanting price to do a specific thing? And the reason I say that is that was one of the most common mistakes I made in my uh, adolescent stage or early stage of trading was essentially I would always try to not only predict, but I wanted the market to do specific things, whereas it was completely up to the market to do those things, regardless of my expectations or my anticipation. So that's exactly why I say to you guys, you don't really ever want to get into the mindset of predicting what the market does, because what that does is it essentially paints a specific framework where the market could do something else, and you've now adopted this framework. It's essentially cemented into your conscious, and you're not interested in anything else that happens. Whereas if you just react off of what price does at specific levels during a specific time, more often than not, you can catch these impulse legs before they actually occur. Whilst they're still in the accumulation stage, quite literally as soon as it changes that state of delivery, you already know what to expect. You know that the market's gone from a market maker sell model to a market maker buy model, or likewise from a market maker buy model to a market maker sell model. And that gives you the perfect time, the perfect plan to essentially put yourself in a position where you can make a profit, you can walk away as a successful trader. But the problem comes in that a lot of people have days where they are profitable. Look, we've all been there. But the thing is, can you do it on a consistent basis? And likewise, it's a lot better for you to rather make $1,000 across $1,000 a day, and you guys do that about 5 times a month, than what it is on one day you make 10K USD, another day you lose 2K USD, another day you lose 2K USD. Yes, you will have still made more money technically, but once it comes to investors' capital as well, they don't want to see drawdown, and they are absolutely going to judge your specific track record based off of drawdown and not necessarily profit or loss, but drawdown. It's the unrealized gains, all right? And the reason they do that is that gives a very good indication as to how accurate you are as a trader, whether or not you have specific parameters in place that allow you to exit your position prematurely or essentially allow you to will pretty much just get out prematurely. I would never really get into a trade before you have all the confirmation. Again, that's another excuse, but that can be mitigated by being patient. So if you prioritize patience and peace, you're already going to do well in this industry. And when I say peace, I honestly just mean like detachment from what you are doing. Don't get hyped up on the numbers. You are going to experience some drawdown. You are going to experience some unrealized gains in form of profit, but you just need to have a plan in place, and you really just need to stick to your plan. I mean, I always use this analogy with pretty much anyone I come into contact with. It takes a chef a very long time in order to cook up a recipe, but once that chef has back tested that recipe, they know that they can create the same dish day in, day out. They can do it an unlimited amount of times, and it's not necessarily going to take more work on their behalf. They just still need to put in the work. And trading will never become easier. You will just become a lot more skilled. You'll become a lot more calm, and you'll become a lot more confident in what to do because you've seen it pan out numerous times. You've back tested it. You have the data that backs you up. And that's a brilliant, brilliant, brilliant way to actually bring in the quantitative analysis. Now, quantitative analysis is, like I said, it's all got to do with numbers, calculations, probability, seasonality. So if you backtest your trading plan over a span of 1 month, 2 months, 3 months, 6 months, 1 year, you name it. Obviously, the further back you go, the more data you can collect and the more confident you can become in the data that you've collected. That data is referred to as quantitative analysis because it's all numbers driven. Okay. Every single business has a numbers guy, and without that numbers guy, a business doesn't know whether it's right or whether it's wrong. From an outsider's perspective, the business could look like it is running optimally, but from a numbers perspective, it could show you potential leaks, bottlenecks that you need to solve. Otherwise, it is going to start uh, impacting your cash flow. So I want you guys to think about it like that. Think about analysis from three different perspectives. It's technical, the charts, fundamental, the news, and quantitative is the backtest, is the data, is the numbers. Okay? And the only way you guys are going to get confident is by backtesting. All right? I could give you guys my entire strategy. We could sit, me and you, right next to one another. We could have the same plan on paper, but what we don't have is the same paradigm. What we don't have is the same risk tolerance. What we don't have is the same emotional control. And I understand that these are just generic talking points in this industry, but it's generic for a reason, like it really is the battle of the mind. And it's like I said previously as well. Your mind makes money. Your heart is not really too concerned with money. It's more about emotions, well-being, happy, that type of thing. So when it comes to money, you really do need to have an open mind. You really do need to be focused and you need to pay attention. You don't want to mess around. You don't want to do stupid things. It's just going to put you in a loss, and it's the last thing you want. All right. So the good news is that we have seen a liquidity sweep. All right. So if we look at 10 a.m., the candle, it's a swing low on both NASDAQ and the S&P. All right. We've now seen a liquidity sweep at 940 on ES, where the Nasdaq has failed to take out that specific low. I'll draw it out here. Let's put some lipstick on the charts so that you guys have a better picture as to what exactly I'm talking about. Okay, so there you can see we have a lower low. And I want you guys once again just to look at the numbers here. All right, look at the low here, that figure. At 10 a.m., it was 581.50. For simplicity's sake, I'm just going to read those two and then the next two. Okay, so at 10, we have 81.50, and then we swept that 81.50 at 1040. Whereas if we see here at 1040 candles all the way here, so we've already seen the liquidity sweep. Now, we need to separate them from strength to weakness. Obviously, the Nasdaq showing strength, but I'm looking at order blocks. I also want to see common order blocks. So I want to see common swing highs, common swing lows. I want to see common order blocks. I want to see common change in state of deliveries. Absolutely everything I do is back my majority. Okay. I'm not looking for one to do one and the other's not doing it. Okay. Both of them need to coincide. Both of them need to come together. Ideally, all three, but I mean, very rarely do we get all three. If all three come into play, that's when we really do see those impulse moves, and price does tend to move very quickly. If you're not ready, it is going to leave you behind. Um, but for this specific example, I need to see common order blocks across all, and we could also have a potential SMT here on the Dow, where the Dow is clearly making a lower low, and this one is not, still making a higher high. So we just want to see. I'm going to remove this for right now, just so that we can see what price does, and at a later stage I can show you guys exactly what it does. For simplicity's sake, we're going to keep the charts as is, and we're just going to stay patient. Like I said, I don't want to paint a whole framework to you lot and then we don't even get the change in state of delivery. Then that entire explanation would have just been in vain. So once again, sit in your hands, be patient, and I will let you guys the opportunity. I will let you guys know about the opportune time where we can act, where we can either go long, we can go short, or make a decision not to trade. Right now, we're making that decision not to trade. We just want to stay on our hands, stay patient, and wait for the opportune setup to present itself. All right, the Dow seems to be going for, or seems to be wanting to go for previous day's low. We have the S&P still going low, but once again, caught in between the Dow and the Nasdaq. I wish I could interact with you lot. It's the YouTube channel. We set it up today. Don't judge. It's gonna get better. Don't worry. Now, I don't know if I'm live streaming or not. Fairly certain I am. Ha! There you go, mate. That is fantastic. Truly a treat. There's no views, which is a problem. But we've gone live. It's a win. It's a win. It's a win. I actually want to check if I can't. I want to check if I can't. How trivia is this? So you guys are watching me watch myself. I want to check if I can't. How trivia is this? So you guys are watching me watch myself. I want to check if I can't. How trivia is this? So you guys are watching me watch myself. I want to check if I can't. One person watching myself. Damn, that sucks. Watch myself. It's a bit unfortunate. One person watching myself. Damn, that sucks. I'm gonna look back at this and laugh. It's a bit unfortunate. One person watching myself. Damn, that sucks. Right, so if we can get a change instead of delivery here on the S&P as well as the Dow, I will be looking to go long on the Dow Jones. And we will be targeting a 1 or 2 because, like I stated previously, so if we can get a change instead of delivery here, and we will be targeting a 1 or 2 because, like I said previously, our trade ranges are normally predetermined or predefined based on the liquidity that we've taken. If we swept significant liquidity on all of our asset pairs, we'll only go for 1:1. If we've swept significant liquidity on 2 of 3, but one of them has not yet taken a significant level of liquidity in the form of current day high or current day low, then I will be looking for 1:2. All right. So for right now, we can see that yes, S&P 500 has made its new day low, as well as the Dow Jones. They've both swept current day's low, whereas the Nasdaq has failed to sweep its current day low, meaning it has not yet swept any significant level of liquidity. All right, and that's brilliant for us because that essentially gives us the green light that we can go 1:2 or 1:1, completely dependent. But ideally, we will get the market maker buy model. If we do in the session, it will be on the Nasdaq as well as the S&P 500. Not exactly on the Dow, but as we're looking right now, things could be shaping up. We've got approximately 1 minute and 40 seconds left of this 5 minute candle, completely dependent on how this 5 minute candle closes, is what we are going to be doing. So if I can see this candle close bullish above this candle's open, that is a change in state of delivery on the Dow Jones. And I would likewise want to see that on the S&P 500, where this would be my pair showing strength and the other pair would be showing weakness. All right. So this is a mitigation block, or that would specifically become our mitigation block. And this would be our breaker block. So stay tuned. We could have a trade very shortly. Fingers crossed we do get one because that would be absolutely spectacular. We'd really want to see a trade. But once again, we're not going to rush anything. We're just going to play it by ear, see exactly how things go, and we will take it from there. Okay, so if we do get that trade, we will be going. Okay, I know these do not look too grand right now. Okay, so what I'm doing right now is I am measuring my order block. All right, that is essentially going to be my entry as well as my stop loss. So entry at the top, stop loss at the bottom. Obviously, if you want to go long, your entry will always be above your stop loss. If you want to go short, your entry will always be below your stop loss. All right. For those of you who don't know what a stop loss is, pretty self-explanatory. It's just going to stop your loss at a specific level of which you get to decide the risk. Absolutely everything associated with your stop loss, your entry, as well as your take profit. Likewise, a take profit, pretty self-explanatory. Takes your profit at a specific level, which you have the power to determine. Okay, so we're going to measure it here. 5.1, 5.81, sorry. All right, but we are not looking to take this trade right now. Like I said, we want to see a change in state of delivery on our S&P as well. We've not yet seen that, so stay patient. Okay, so the Nasdaq is maintaining its position as the strongest pair. It's probably going to be the first one to hit buy side. Should price want to go for buy side, then I would say the S&P followed by the Dow. The Dow is completely down. It's obviously taken this low, whereas S&P could not take that low. So we can clearly see that there is a cracking correlation, which is a good thing for us. Now we just need to see confirmation to the upside. So if we can see a change in state of delivery here on the S&P 500, I would need to see this candle close above there. I'll be looking to go long on the Dow Jones. So stay tuned. We have approximately 2 minutes left of this 5 minute candle. If we don't see a change in state of delivery within this next 5 minute candle, we're just going to remain patient, see what the next 5 minute candle does. However, if we see a violation of these specific levels, we're not going to be looking to take any trades as of now. And we'll just once again sit on our hands, wait for something new to present itself, and act accordingly. Completely dependent on whether that is a long or short, as well as the relationship on our other assets. So Nasdaq's looking good. S&P is looking somewhat good right now. Bear in mind we still have a minute and a half left for the candle to close. Dow Jones is already done for me. Like I'm fairly set on taking the Dow. Um, Ideally, I would see this specific trade pan out on the Nasdaq and the S&P just because they are pretty much twins when it comes to price action from a technical standpoint. But the Dow Jones is also good, so we'll use them. I mean, all three will do. But this is not what I want to see from the S&P 500. Uh, so let's just stay tuned, stay patient. Right, 50 seconds left. 20 more seconds. There we go. S&P looks like it's corrected itself now. You can see the Dow and the S&P are somewhat moving together, which is fantastic news for us. We will, however, just need to wait for a slight retracement on the Dow Jones before going long. But it does look good. It looks very good, to be honest with you. I'm loving what I'm seeing. That is not what I wanted to see, though. That is not exactly what I want to see at all. So, a prime example, once again, why we would need to be looking at the numbers and not just looking at the candlesticks, is because here, if we look at that one's high, that candle's high, that high comes in at 558, then this candle's open comes at 558.25. So it is a little bit higher than that one, which is completely fine. Apologies, I was looking at the wrong thing. My bad, sorry. Is 586.25. All right, bottom line, the highest one of that swing high, okay, is of course this candle's close. Apologies, guys, I'm looking at the wrong damn number. They are both 586.25. All right, rookie error. Now, if we look here, This close is 586.25. So they are level. Now, is level above? No. Is level below? No. Level is level. That's why I'm always looking at the numbers, okay? You don't have to guess about this stuff. It's it is what it is when it comes to a numbers perspective, okay? And that is absolutely fantastic. So I will be looking to take a long on the Dow Jones. We do need to, however, see a retracement back into this specific order block. We've seen a S&T divergence, so a smart money tool or smart money technique or cracking correlation, whichever one you would go for. So I will be looking for 1 is 2, but instead of using my uh, risk reward projection, I'm going to use my Fibonacci retracement in order to come to specific gradients of this specific order block. I'm targeting these two down close candles. Okay, 10:45 a.m. and 10:50 on the Dow Jones. Those are my two candles that I'm specifically focused in on. I do like what I see on the S&P 500. It is continuing higher. We could see a change in standard delivery should it close as it is now. We did not get that in the previous 5-minute candle. So no one should be long if you are trading like me. If however you are, you do you. I can't tell you what to do. I am merely an advisor. You are the driver. You decide. Okay? But we are going to get our changes again. We have 2.5 minutes. So guys, I am quickly going to run to the loo. ETA, 2 minutes. I'll be back for this 5-minute close, and then we'll see exactly what that is. But I've calculated everything so far. So, like I said, see you in 2 minutes. Right, we're back. Okay, so S&P 500 looks pretty good as is. It's definitely going to be changing the standard delivery, or it has already. Apologies, it will in the next 35 minutes if we do get a candle close as is. Should we close bullish, I am looking to buy, but I need to see a retracement on this level for the Dow. If I cannot get that retracement, then I will not be looking to take this specific entry. So let's see what happens. We have approximately 15 seconds of this 11:05 candle. Fingers crossed we can get our move. All right, and there you have it. We do have a change in state of delivery on both our S&P 500 as well as the Dow. All we need now is a slight retracement lower on the Dow Jones Industrial Index without the S&P invalidating this specific order block. What I mean by that is if it either closes below this low or if the wick goes past this order block range, then I'll no longer be looking to take that trade. I'll sit on my hands. And that's a prime example as to why we are going for the breaker pair. It gives us a safety net in that should the S&P is obviously a lot closer to its order block, so it'll just by default probably enter sooner than what the Dow will. And likewise, the Dow will give us enough time to see exactly what the S&P does. So if S&P violates its specific level or its specific order block, we are not going to be looking to take this trade. For right now, we are looking good. I do think the Dow is fairly high up. To see it come all the way down would be somewhat scary, but we'd be happy to take the trade as long as S&P does not validate its specific order block. Dow Jones is good. Dow Jones will be our breaker pair because it has taken liquidity here, and the S&P 500 is our mitigation pair. All right. I'm always looking once again to marry pairs together. So there's a common swing low that's been taken. There's a common change in state of delivery that has occurred. There is a common liquidity level in the form of buy side liquidity. And we now have a breaker and a mitigation. So those are the two pairs that are married together. Okay, they cannot violate. If the one gets stopped out, I immediately exit the pair that I was in. And me specifically, I'm always looking to go into the breaker pair or the pair that's taken the most liquidity because we understand that these markets thrive off of liquidity. They can only move once liquidity is taken. So if a pair takes liquidity, it has no reason to want to come and sweep more lows. All right. It should then just automatically want to keep pivoting up and go towards its draw on liquidity, in which our case would be buy side liquidity. So because the Nasdaq is not hit buy side or sell side, I am of strong belief that the Nasdaq has to hit either buy side or sell side. So it'll probably be the first one to hit buy side. We will remain in this trade until either one of the two is hit or the Nasdaq hits its buy side. If any of these assets hit their specific targeted level, we'll be looking to exit the trade or just abandon the trading idea have we if we do not get the opportunity to take a trade. Okay, I'm gonna go full view, see what happens here. We have two options. We could enter the S&P 500 should it get into its order block, or we could maintain our stance on the Dow Jones being a breaker. Technically, doesn't really matter which one you enter on. Just from probabilities perspective, the breaker is usually the better one because it has taken the liquidity. So we'll remain patient. We'll see what price does. If it gives us a chance to go in the Dow Jones, definitely taking it. If it gives us a chance to go in the S&P 500, I am a little bit more nervous about the Dow because the S&P because it hasn't taken that specific sell side. that minor sell side in the form of this swing low as well as this swing low. Okay, we'll make sure that our interim broker is all good, all set. Yep, looks good. No trades taken. We may just see a retracement on the Dow. That would be phenomenal. Truly phenomenal. Okay, so the Nasdaq is clearly showing strength now, which is good. We want to see the Nasdaq keep rallying, okay? Because the Nasdaq to us is going to indicate strength and weakness right now, since it's not the pair that we are looking to target. And the reason I say that, it's not given us any significant market structure here. Well, at least from a market maker buy model, which is the ideal profile that we are looking for. That we've seen in the S&P 500 as well as YM being the Dow Jones. So, chaps, be patient. See what happens here. If we can get an entry, we'll take it. I personally feel a lot more comfortable taking it on the Dow Jones. Um, but we might not get that, which is just going to be, it's one of those times where you got to make a decision now. Okay, and this is my price projection. Obviously, because, like I said, I'm either looking for 1:1s or 1:2s. So for this specific case, I'd be looking for a 1:2 on either Dow Jones or the S&P 500. Preferably the Dow. It's taken the most liquidity. It has the least reasoning to want to come back down for a low or take more sell side. Whereas the Dow has failed to take out this swing low here. It's also failed to take out this swing low. It's just more inclined to want to go lower, take out more stops, refuel itself for a move higher. We could, however, just see a further expansion up right now. Obviously not ideal, but like I said, my eyes, my target, my ideal entry won't be on the S&P 500. It will be on the Dow. If we create a continuation order block on here or on the specific 5-minute chart, then I just don't see price wanting to return. Let's just get this out of the way so you guys see. S&P was the move, man. Damn, S&P was the move. I'd be break even. If I went on S&P, I'd be break even because I'm looking to target 1:2. Like I said, Nasdaq is not taking out any significant sell side or buy side, so that's why I'd be looking for 1:2. Yeah, I was really hoping we could get a retracement down on the Dow Jones, but a little bit silly of me if you look at, well, not really. I'm looking at it from a liquidities perspective, so that's my reasoning. But after we hit that 1:1, I'd be break even on S&P. And if we get to that 1.5 level, then I'd trail my stop up to the 1 or the standard deviation of the specific order block. One standard deviation. All right, so I'm cash. I'm not in any positions at the minute. I was really hoping we could get a entry on our Dow, but we've not exactly got that. S&P does look like the much better move to have taken in hindsight. Of course, it's a bit unfortunate, but it is what it is. It is a learning curve. I'm not exactly wrong in my analysis, but there's obviously things we can do in order to improve. It was either the Dow or the S&P that I was looking to go long on. A bit unfortunate because, as you can see, S&P is doing very well right now. It's rallying fairly strongly. So what we'll do here, so mark that out. If we could get to that 1.5 level, that would essentially be me trading my stop to 1:1, which would be a very good day. I'd be smiling. I would be smiling. Okay, so my stop would be here. Alright. So should it come back to its entry level, I would anyways be out at break even. Again, he said, she said, doesn't really matter now in hindsight. But we can still use it as a lesson. There will be more trading days, Lord knows, if he allows it. And then we can execute with this exact same thought process, this exact same plan. We would just change instead of going for our breaker pair or the pair that's taken the liquidity, would essentially be going for the pair that has not, or whichever one would offer you that entry point. And more often than not, it is usually the mitigation. So it's a bit unfortunate, but stay tuned, see what happens. I really need to get some music on these live streams. I've noticed. All right, so we do seem to be having a small little retracement on the Dow. Still has to come down quite a hefty way in order for it to put us in. But nevertheless, we are going to stay patient. We are going to wait. We really want to see a trade on the Dow. That would be best case scenario. But obviously, you live and you learn. Fortunately, today's lesson is not going to come at a cost. And I've learned a lot today. I mean, we went live. This is the first 5 minutes shy of 2 hours. 2 hour long live stream for a man's first live stream. I'll take it. Very grateful for that. Okay, so Nasdaq is looking good. It's pushing. There is some minor sell side liquidity that will be at the top of these swing lows. They are relatively equal, so oof, there's so many of them. I can't see Nasdaq not trying to trade above that. Um, Look, I'm very, very, very sure that the Nasdaq will go for buy side liquidity, either buy side or sell side, but it will be hitting one of those levels within today's trading session for sure. And the reason I say that is it's not hit any level. The S&P 500, however, has hit its level. Dow has hit its level. Now, if we were long here, we could be very optimistic and just remain break even until the Nasdaq hit its buy side. But again, we'd be leaving our entire position on the table, or we'd be taking stops. I mean, trading stops, uh, perhaps even taking a couple partials. But for right now, like I said, we are targeting the Dow. Okay, Dow is taking the most money. Liquidity is money. Okay, so when I say liquidity, I mean they've taken a whole bunch of retail traders out of the market. They've essentially taken their money from them. They've robbed them, mugged them, you name it. Those individuals no longer have their money. The market has the money. The interim broker that they've used has taken their money. They're at a net loss. Okay, now you want to go long in the assets that take those, or that takes the liquidity, that takes the people's money. Because once it takes money, it shouldn't want to keep going lower if your bias is right. And if you've been patient to wait for a change in state of delivery across numerous different assets and waited for the majority to outweigh the minority, then you should be good. You're in a very good position. Your odds are as high as they're ever going to be. There are a couple of things that you still do need to take into consideration. We obviously don't want to stay in a trade or take a trade after a key level is taken. Now, we've not got an example of that today, so it'd be pointless of me running through that example. But as time goes by, I promise you, if the Lord allows it, I'm going to be on these live streams for as long as humanly possible. This is really something that I am passionate about. I've developed a very good understanding of these markets from a technical standpoint, and you guys are going to get to see all of it live every single weekday at 9:25 Eastern Standard Time to about noon Eastern Standard Time. It's roughly 2 hours 35 minutes for each one of these live streams. I know it is a lot, but there's a lot of value to be given. There's a lot of insight for you guys to learn, and there's a lot of money that can be made if you guys really do lock in, put in the grind. And I mean, I'm in the same boat, okay? No one wants to lose money. Everyone wants to make money, especially now in the internet age with AI coming out. I'm sure a lot of you guys will be a bit nervous and a bit hesitant to go in the AI route. Um, and I mean, rightfully so. We don't fully understand what AI is going to be used for. There is a lot of speculation. There are a lot of conspiracy theories. Some may be right, some may be wrong. But, it's once again not for us to say. We don't really want to predict anything. We just want to react. And right now, it's not a bad time to get into AI. But if that's not your boat, if that's not where your passion lies, if that's not what you want to put your time into, I understand it. I mean, that's why I'm doing trading. I really do love it. Like I said, it's not the most fun, but I've been doing this for about 6 years now, so I am fairly well versed in the art of a candlestick. And all I want to do is essentially just, well, I don't want people to have to go through the same pain that I went through. I don't want people to have to experiment, lose, learn for 6 years before they hit profitability. I really want to make that road as short as humanly possible, as painless as humanly possible. Now, can I make it pain free? No. Can I turn you profitable? No. Only you can turn yourself profitable. Um, and that is ultimately just going to come down to your quantitative analysis. How many times you backtest the market? How much confidence you have in the market because you've constantly tested and collected key data to something that works, and you know it works because you have back tested it. You've put in the time. You've locked in essentially. You've not made excuses, but you've gone a route that is fairly questionable from everyone's standpoint, to be honest with you. I mean, the statistics don't lie. If we look at the quantitative analysis of this industry alone, it's about 90% lose. Then of the remaining 10%, it's estimated that approximately 7% to 8% of those only are break even after 2 years of failure. We would have hit TP on S&P, of course, would have, didn't, is what it is. But fortunately, guys, the analysis has all been correct. All right. The only thing that we've got wrong today is essentially the asset that we've targeted. We've gone for the Dow Jones, which is not the wrong asset to target. Price has just not given us that opportunity in today's session. Now, it is a bit of a knock on the chin because you want to walk away with some money. You know, that is ultimately how you know you did. That's ultimately how you know you did a good job. All right. Words are opinions, numbers are facts. Numbers and money. Okay. And we've had a good day. We were patient. We anticipated the market in the right way. We didn't predict. We reacted off of a key specific level. The only thing that we've gotten wrong today, chaps, is quite literally targeting the Dow instead of the S&P. Now, by default, if the breaker block loses if the mitigation block invalidates its setup, we would automatically exit the breaker pair. Again, chaps, stay tuned. I'm going to make a playbook for you guys that has all of this terminology. I'll also make a couple of recordings in there so that you guys are well versed with all of the terms I use. And with these live streams, you guys are going to be able to implement that and see exactly how I implement that. But there are specific things that I cannot help you guys with, and that's patience. That's why I keep iterating the importance of it. As these live streams progress, as I start to grow a community on social media, which I know I will because I'm not going to stop until I do, you guys are going to hear me say it absolutely every single time. And I'm not only saying it for your good, I'm saying it for my own. All right. I am also here to learn. I'm here to lose. I'm here to win. I'm here to go at break even. I'm here to walk away from a trading day with no trades, like we are seeing today, even though everything has gone to plan. But again, I don't want to sit here and say I could have, I would have, I should have. The reality is I did it. So we're going to have to come back tomorrow. We're going to have to stay locked in. Now, we have a remaining approximately 27 minutes of this hour. And that will essentially conclude the New York AM session, which runs from 9:30 to about 12. Now, is that set in stone? No. That is just my interpretation and all the data that I've collected. Those are the key times to trade. 9:30 to about 12 Eastern Standard Time is when there is the most amount of volatility in the marketplace, and that's the best time to catch a trade. And I've proven that right here in real time in front of you. We've essentially analyzed the entire market to a T. We said that the Nasdaq, had it not taken any specific liquidity level, we would be targeting buy side if we got a market maker buy model across majority of our pairs. Now, what are the majority of our pairs? They are the S&P 500 being our breaker and the Dow Jones Industrial Index, which gave us our, sorry man, I mixed that up. Apologies. The Dow Jones is our breaker pair because it's taken liquidity, and the S&P 500 is our mitigation pair because it has failed to take that specific liquidity, but both are as important as the other. They are essentially now twins. We marry these two assets. If one violates the other, or if one violates itself, it automatically disqualifies the other. So if I was in a long and one of my pairs hit its so-called stop loss, we would get out of that position, whether that's in a loss, whether that's in a win. We just want to get out, all right? And that's exactly why we are constantly looking at these markets from a majority versus minorities perspective, okay? I'm very happy with today's session. I mean, it's my first ever live stream. Did we take a trade? No. We were able to analyze the market in real time and establish that these market conditions are 100% manipulated. We understand that what is manipulated can be understood, and once understood, we are able to implement it and we can carve a profit out of these markets. Okay, this game is hard, it's very hard, but if you truly keep your head down, stay locked in, pitch up every single day 9:30 to 12 Eastern Standard Time. I'm going to do absolutely everything in my power to give you guys the best technical analysis, the best fundamental analysis. We're not exactly going to dive into quantitative analysis. That forms part of my strategy, and all of that work has been done, which is beneficial towards you, meaning you don't have to go and back test it, though I urge you should, because again, I cannot teach you patience. That's something that only you can learn. I cannot teach you confidence. That is also only something you will learn by doing your own due diligence. due diligence in the form of backtesting. Because what backtesting does is it gives you data, and with data, you can rely on numbers. You can rely on things that have worked, that haven't worked, have worked, and what have not worked, and you're able to optimize. Similar, if you guys leave a comment down below, I'm able to optimize exactly what I did right, what I did wrong, and how I can improve on my value. How much value am I giving you guys? Do I make you guys feel welcome on these calls? Do I make you guys feel like a hostage? Are you guys having fun? Are you bored? Are you in a neutral environment where you're not allowing any of your emotions to take place? That right there is a superpower. Being able to detach yourself from the possible scenarios, and the only way you are going to do that is by coming up with an action plan that actually works. Okay, that is the name of the game. Patience, of course, is one of them, but ultimately, patience and confidence are vanity if you do not have a system in place which you can implement every single day on a consistent basis. Okay, don't worry about making 10K on a trade, or 2K, or 1K. If you guys can consistently make $10 every single trade, every single week, you shop. Okay, so that's a South African term. My bad. What I'm trying to say is you guys are good. All right, because remember, we're in an industry where our income is essentially tied to the amount of money or capital we have. Now, we also understand that money is infinite. All right, there is no money will never run out, is what I'm trying to say. Okay, so if your income is capped to the amount of money you have in your portfolio, surely you should only prioritize consistency and profitability. And as you're a consistent and profitable person and you're able to market this to people and show them what you do, you can win, then all of the investors will come to you. There are so many companies out there who are currently offering money towards profitable traders. Okay, technically they offer their money to profitable and unprofitable, and the profitable people do ideally make money, but of course the unprofitable people lose. It's the nature of the game. All right, come prepared. These markets don't want you to win. Your broker does not want you to win, because when you withdraw from your interim broker, they are technically losing on their financial books or their income statements. They obviously don't like that. So they are going to add things like spreads. They're going to add commissions. Pretty much every single corner you take is out to get you. There's an enemy there somewhere lurking in the shadows. All right. Now it's our job just to essentially be patient. All right. Say this every single time, and I really do mean it. Okay. I'm saying this for a reason. You want to be patient because the highest probable scenarios will always have some form of patience tied to them. They take their time. Like we saw today, we did not see an immediate impulse leg within the first 10, 15, 20, even hour. Our impulse move has only come now as we are entering the latter stages of the specific session. There's approximately 21 minutes left of the New York AM session, of which I'll be stepping away. I'm going to stay with you guys until noon. But guys, it's a prime example as to for the full 2.5 hour session, you guys want to be locked in. All right, you want to position yourself in an area where you are limiting the distractions. Okay, you're dealing with money. And ideally, you're going to get to a point where you are dealing with investors' capital as well. And it's even more pressure, it's even more stress. But like I say, pressure and stress are good things as long as you have a plan in place. All right? Because a plan in place is going to mitigate your reliance on your emotions. You're not going to feel anxious. You're not going to feel scared. You're going to feel confident because you know that once price hits a specific level, there are specific actions that you need to take. All right. And if price does a specific thing, it's just giving you more data. And that's what it's all about. Okay. That's why we backtest, is to get data. That's why I ask people to comment so I can get data, feedback, optimize, and win. All right. It's the name of the game. So, guys, as we come to the closing of this specific session, I'm definitely not going to be taking any more trades. There, more often than not, is only one trade. It was absolutely brilliant. Truly, what a bloody treat to do this live in front of all of you. It could have been better, of course. There is always room for improvement. You see, even on a day where our technical analysis has been flawless, you're not always going to walk away with the win. Okay? There have been times where I did absolutely everything right, and then I was just not patient. Had I just walked away, everything would have been golden. And I'll give you guys a very good story. Everyone is constantly talking about Bitcoin, oil, or gold back 10, 15, 20 years ago. The thing is, Bitcoin would have only been a good investment had you invested and completely forgotten about it. All right? Had you invested in 10K, have you had you invested 10K in Bitcoin at 10K and it hit 50K, you would have five extra money. And the chances are you would have got very emotional. You would have said, that's a 500% return on investment, which is absolutely spectacular. I'm going to take my money, I'm going to run with it. Whereas for the person who did absolutely nothing but invest, wait, that person is only up about 700% now. I say only, it's still very good. But at the peak, they would have been up at about, I don't know, what was the peak price of Bitcoin? I'm not going to look right now. It was, let's say, 120K. Okay. That's 1.2 thousand% return on investment. It's absolutely astronomical returns. All right. So that's why trading is once again so hard. It's essentially every time you take, well, every time a human takes or makes a decision, it is either backed by thought or emotion. All right. More often than not, people don't have emotional control. So they allow the emotions to take control. They allow their emotions to persuade their perspective, and that has a profound effect on the action that they take. Whereas someone who does have a willpower and a sense of control over the emotions is able to think from a general's perspective, where it's essentially a third party perspective of you. You're essentially looking at yourself from another person's eyes. And you're looking at yourself and you're saying, I wonder why he's doing this. I wonder what he's feeling. And I wonder what he's going to do. All right. And the only difference between that is essentially your ability to control your emotions. Now, I understand I'm still someone who is learning that. I am by no means, way, shape, or form perfect. I'm flawed in absolutely everything I do. I don't walk on water. And that itself is proof. But I am trying. And that's exactly why I want to do these live streams with you guys, because it holds me accountable for everything I do. It is the perfect way to essentially record my entire stream. I'm able to now go and look back at my stream. I'm able to look at specific things that I like, that I don't like. Maybe I stutter. Maybe my lighting is wrong. Maybe I move a little bit too much. Maybe I just chat too much. Ha, I was going to swear, but this is a family channel, all right? A place for peace and prayer. All are welcome, truly. Bottom line, I'm going to do absolutely everything I can in order to give you guys the most value humanly possible, all right? All I want from you guys is maybe stick around, a comment, a like, subscription. That'd be awesome. And surprise, surprise, absolutely every single one of them are free. And I'm helping you guys for free to do something where you can make money, all right? Now, whether or not you choose to copy my trades is completely up to you. All right. I have no say in that matter. I just hope that with these live streams and as we get to know one another, you guys will do your due diligence on me. I might not show you guys everything behind the scenes at first, but what you guys can do is essentially backtest everything that I talk about, see whether it works for you. See whether it works full stop. All right. The market's not going to lie. I can't turn back time and change the way the market moved. Okay. I can tell you guys what I did. And I did tell you guys what I would have done, obviously, in real time, hindsight now. It's just a bit unfortunate, like I said. The only thing we did not do right was target the right asset. Okay. It's not a train smash. It's just a lesson. All right. And every single lesson, well, usually you hit your head and then you find out that you shouldn't do that specific thing, or you take a trade, you hit a stop loss, and then you find out that that's probably not the best way to go about things. But in today's session, we've taken no losses, we've learned a lesson. It's been an absolutely impeccable start towards this journey of my life. I'm truly elated to be here. For the longest period of time, I wanted to become a not necessarily a live streamer, but a professional trader, and to be able to show people that it is possible, that yes, these markets are manipulated, and yes, you don't need to be afraid. You can make money. You know, you don't need to be this wizard. You really don't. You just need to know what to look for, okay? And you're going to find out what to look for through these live streams. You're going to find out what to look for by doing your own due diligence. You're going to find out what to look for by doing and gathering quantitative analysis through backtesting, okay? I understand. Not a lot of people like backtesting. I absolutely hated it. Every single time I heard someone say you need to go backtest, I cringed. You know what I mean? I was just like, nah, dude, I don't want to be doing that. Like, why can't you just tell me the secret sauce? Why can't you just, you know, teach me? And it's only after failing for so many years that you actually come to the conclusion that these guys are really just trying to help you by telling you to backtest because there were specific things that they can't teach you. And that is emotional control. That is how to manage your own psychology. All right. Everyone is different. Some people get offended for small things. Other people are thick skinned. You can say whatever you want. They don't get offended. You know, no single man born of a mother has the same fingerprint. All right. Likewise, no man or woman has the same emotional control. No man or woman has the same intellect. But fortunately, what can be passed down through time is a person's perspective. All right. Is a person's way of doing things. So I really hope you guys do find this video to be somewhat shape, form, insightful. Now, I don't know how many people are currently viewing this. If there are thousands, all glory to you. All glory to God, I take that away. But love be upon you. If there's no one watching this video, great. This video is for you, Talano Buerta. This video is for you, brother, because you're going to look back at this one day and you're going to be so thankful that you started this. You're going to look back at all the hardships, all the pain, all the suffering, and you're going to tell yourself, this is why I did it. You know, these are essentially the foundations. Be the man who builds his house upon a rock. And I'm going to make sure that my house is built upon the best rock, Christ. If you guys don't know, he's the best. Apologies, I also did say that in a way where it might have come out as like a blasphemy, which is definitely not what I was going for. But bottom line, chaps, the best foundations you can have in trading is to have control of your mind. All right, like that is the enemy. You are the enemy. Okay, and you have the ability to essentially not turn back time, but you can really hop in advance if you can just take control over your emotions. Don't allow silly things to influence your actions. Okay? Do your absolute best. I'm gonna do my absolute best in order to give you guys the most value. I've said this numerous times now. Like I said, this video is not for you. This video is for me. This video is for Talano Buerta. This video is for Talano so that he can go and watch this full live stream from scratch. He's going to make a couple notes, what he likes, what he doesn't like. If there are any comments, any likes, any dislikes, any subscriptions, those people are going to be reached out to so that I can get feedback from you. Okay? I'm on a quest to fill up my quantitative metric. I'm just talking up my bum. I'm not going to be doing that. But I'm going to be optimizing. All right. I'm going to be trying to get as much data as I can. That's just what I do. That's what we've done this entire session. We've gone from higher time frame to lower time frame to higher time frame to lower time frame. Okay. There is no one time frame that just works as magic. We use all of them because every single time frame gives us another small piece of data. And we just can't have enough pieces of data. Okay. We are on the constant pursuit of data. All right. There's a song. It's called "Constant Pursuit," or no, "The Pursuit of Happiness." I think it's by. I listen to this chap every day. Kid Cudi. That's it. Okay. We are on the constant pursuit of data, constant pursuit of perfection, constant pursuit of correction. Okay. This constant pursuit of just persistence, perseverance. That's what we want to do. That's what trading is. All right. If you didn't know, now you know. Trading is a game of problem solving. There's going to be problems every day. Like I said, trading doesn't get better. Every single day we're going to come here and we're not going to know what happens. Okay. Every single day we walk in this room, there's a 100% chance that we are going to lose our money. All right. It's up to us to gather information, and every single piece of information we gather, it just decreases our loss percentage. All right. And that's the name of the game. You don't want to be optimistic. You want to be pessimistic. It's a negative way of looking at things, but it's only for this industry. Be as optimistic as you want, though have realistic expectations. Be as optimistic as you want in your life, in your personal lives, whatever it is. When it comes to trading, when 9:30 rings, between 9:30 and 12 Eastern Standard Time, New York AM session, you are a pessimist. All right? You are working backwards. You are gathering information that decreases the chances of you losing. You don't increase the chance of you winning. You can't do that. Okay? No one can do. Technically, we can by being patient and having a plan. But bottom line, just work backwards. All right? We are working for ways. We are collecting data that essentially mitigates the chances of us losing. All right? And from there, we are going to build. You're going to start optimizing. You're going to tell yourself, okay, I did this on a specific day and I only lost this amount of trades. Then the next day you did this and you didn't lose a trade. All right. You need to dive into the day where you had a better performing uh, session. And then you need to essentially see what you did. And that's the importance of journaling. And that's why you guys do need to make some form of uh, Google Sheets, Excel, some form of sheet where you can track specific things on a consistent basis so that after a week, 2, 3 month, or even 2 months, you can look back on that and you can see exactly what components work, what components had a pivotal point towards you in becoming a better trader. All right. So I think that's enough for the session. I think I've laid a good foundation for myself, of course, and hopefully for a couple of you, maybe one, maybe two, maybe none. But I'm happy I did this. Talana, I'm stoked. Thank you. Many a times you have procrastinated, but today was not one of them. Today was a good day. Today you jumped. Today you traded. Well, you didn't trade, unfortunately. So, proof. Get better, brother. You can do this. All right? You don't need to worry. Be confident in what you do. You have the data. You've backtested. You've done this. This is what you do. You're a pro. Now it's time for you to show the world what you can do. All right? And to anyone who watches, awesome. I love you. If you're watching me, hey man, I'm a man of God, bro. So if you're watching me, surely you're not far as well. Or again, that's arrogant. But I'm trying. All right? Bottom line, I'm trying. I'm a real person. I make real mistakes. We all do. I'm not claiming to be perfect. I don't want to be perfect. What's the fun in that? All right? I want to be flawed to my core so that every single piece of improvement is just pure elation on the mind. And right now, it feels like I've just uncovered one of those. Okay? I think I've chatted a bit too much. I think I've chatted a bit too fast. Probably should have thought a bit more before I spoke. But again, I wouldn't have known that if I didn't start. You know, there's a saying: start quick, start slow, start messy, just start. All right, that's the name of the game. Just start. If you guys haven't, do so. We are approaching the last 5.5 minutes of the session. I think I'm going to end it here. Like I said, there's nothing really is going to happen. Or you know what? I did say I'd be until 12. A man is only as good as his word. A weak word, a weak man. And I'm not a weak man. I'm done of that. All right. Been a week in the past. I want to do it no more. So we're on the train of improvement. We want to see the Nasdaq either hit the buy side liquidity, form of current day high, or the low. But just for right now, because we're in a market maker buy model across two of our three pairs, meaning that majority is in alignment, I do have a strong conviction that we will see upside potential on the Nasdaq. Now, we might see a slight retracement. It's only normal after we've seen a sweep and sweep. What the 12 o'clock's definitely around the corner. After we've seen a sweep, yo, I almost did it again, a sweep of minor buy side, it's only normal to see a retracement. All right, I don't expect price to give one strong impulse move up right now. If it does, cool. If it doesn't, again, we are pursuing patience, peace and patience. All right, the Lord will do the fighting. Truly, if you put your faith in Him, you shall. All right. I shouldn't say sharp. It's like slang for my people, but you know. Anyways, I'm a South African bloke. If you've not been to South Africa, you need to pull in quick and fast, whilst we still have a standing country. But yeah, guys, that is pretty much a wrap. That was a very good session. I'm very, very, very happy with that. We're gonna see how everything goes. And when we started this live stream, the charts were naked, as is. You guys have pretty much seen me. I'm gonna leave this one because it's not taking anything. I'll edit this though. Bullish bias. Okay, how? Yeah, and guys, don't worry. I mean, most of the terminology, you guys won't be too familiar with. But like I said, it's just, I guess you just got to get to know me. I'm trying. Lord knows it, and we'll just see. We'll see how things go. I don't have a structured plan when it comes to these live streams. It's honestly, just improve. That was it. Was start, improve, and carry on. So all three of those need your help. I see this as a perfect scenario. We're going to be doing all sorts of analysis together. We're going to be essentially compounding the data we collect in order to make money. And since we're making money together, that essentially makes us business partners. So, as a business partner, I'm asking you to like, to subscribe, to leave a comment, to dislike if you didn't like it, to block my channel if you thought it was an absolute nuisance. I will not take it personally. I'll definitely take it personally because that's just the type of person I am. You know what I mean? Like, it's data at the end of the day. If you didn't like it, it's something I need to change. But any action, any thought, any intent that comes my way, I will take it with open arms. I will do my absolute best to see the positivity in everything you guys do for me, for this channel, and for yourselves. Truly, I am absolutely elated. I think we're going to end the session off there. What I will do here is not close any screens because I don't know actually how to fuck. Oh, oh, sorry. Sorry, it's a family channel. Now I really hope no one's watching. And I'm probably gonna get my wish. Anyways, guys, that's a wrap. All right, we have 1 more minute remaining. We will stay tuned for this for the Nasdaq. But what I will do, I'll just move you guys over here. The Dow Jones clear, S&P is clear, and the Nasdaq, like I said, completely normal series retracement after we've taken mine by side like this in the form of swing lows and swing highs. In this case, swing highs. Sorry. And tomorrow we're gonna do it again. Tomorrow we're gonna do it again. Astronomical way to start the journey. Truly, the Lord is my shepherd, and He is with me. What a treat! What a treat, guys! It's been a long time coming. I've really waited a very long time for this, to be honest with you. Uh, but yeah, we're gonna do absolutely everything in our power to stay consistent, to stay relentless, and just pursue righteousness. That's what I want. That's what a man wants, eh? But anyways, guys, if you found this video to be insightful, some way, shape, or form, consider leaving a like, subscribing, commenting, dislike, block me. Just do something, please. I'd appreciate it. Guys, that's a wrap. I love you lots. Till the next time. Cheers.